Hi, I'm Kalila Reynolds, and welcome to another edition of Taking Stock Live. We're bringing you all the latest business news and telling you how it will affect you and your money. Now, don't forget to head over to my website, KalilaReynolds.com/newsletter once this live has ended to get my newsletter straight to your inbox twice a week. Now, where is everyone joining us from tonight? Let me know in the chat what part of the country, what part of the world are you watching from? And of course, hit that like button and share this video with a friend. Now, here's a look at what's coming up on tonight's show, followed by what's hot in business. Come on, let's get this money. Word on the street is that pharmaceutical distribution business RA Williams Distributors is eyeing a potential IPO. They've just publicly announced $1 billion in revenue for the year ended April 30, 2022. We'll ask CEO Audley Reid about the rumors. And the analysts weigh in on the latest market developments. Sagicor Group's results are out. How did they do? And stocks tumbled on Friday as Wall Street's summer rally faltered and rate hike fears resurfaced. We'll discuss. But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Many investors took to social media last weekend to express displeasure over what they say is a meager basis of allotment from edtech company One-on-One's IPO. The company's initial public offer was 8 times oversubscribed. Sagicor Investments, which is the lead broker, said that applications in the general pool will only receive the first 5,000 shares they applied for, plus 2% of the remainder. It's the lowest allotment for the public in recent history, even lower than Dollar Financial's recent IPO, which was 10 times oversubscribed. However, One-on-One's IPO was smaller than Dollar and also had more reserved pools. Notably, those who applied in the teachers and trainers pool will get the first 80,000 shares they applied for, plus 3% of the excess, while One-on-One employees will receive their first 500,000 units, plus approximately 70% of the excess. The convertible loan conversion pool and key strategic partners will receive full allotment, and applicants in the Sagicor pool will receive their first 450,000 shares, plus an additional 1% of the balance. The Caribbean's newest low-budget airline is set to take off in September. Arajet, which will be based out of the Las Americas airport in the Dominican Republic, will offer flights to over 20 destinations across 12 countries in Latin America and the Caribbean, including Jamaica. According to the company, flight prices will range from as low as $55 for one way to $149 for a round trip. Arajet has scheduled its first flight from the Dominican Republic to Jamaica for October. According to the company, its affordable fees can be attributed to the use of Boeing's 737 MAX 8 aircraft, which it says is more environmentally friendly and uses 14% less fuel. This means that the airline will be able to cut down on fuel expenses and pass the savings on to customers. At the start of its operations, Arajet will have 5 737s, with an additional 20 in the delivery and manufacturing process. Jamaica has the second highest level of brain drain in the world this year, according to theglobalEconomy.com. Brain drain refers to highly trained or qualified people leaving a particular country. With a score of 9.1, Jamaica ranked second out of 177 countries on the 2022 edition of the Human Flight and Brain Drain Index. The index assesses the economic impact of human displacement, whether for economic or political reasons, and the consequences this has on a country's development. The higher the index, the greater the human displacement, the website said. Global Economy said it arrived at its index indicator for each country by examining available data between 2007 and 2022 from a wide range of sources. Other Caribbean countries in the top 10 are Haiti and Guyana. The government of Barbados has announced a 5-month cap on fuel prices. Prime Minister Mia Mottley said that gasoline prices will be capped at $4.48 BDS, which is roughly $2.24 US per litre. Diesel will be capped at $4.03 BDS, which is just over $2 US. The fuel cap will remain until January 31, 2023. Prime Minister Motley said that if fuel prices fall below that cap, those reductions will be passed through to the consumer. However, if the prices go above that cap, then the government will subsidize the cost and keep the cap in place. The Prime Minister also announced an extension of the 14 cents per litre cap on value-added tax on gasoline and diesel until January 2023. A U.S. federal judge has ordered 3 of the country's largest pharmacy chains to pay up over their role in the country's opioid epidemic. Walgreens, Walmart, and CVS have been ordered to pay a combined $650.6 million to 2 Ohio counties that they were found to have flooded with prescription painkillers. The award comes after a first-of-its-kind federal trial targeting the 3 major retailers. Many other drug distributors and makers have either settled or filed for bankruptcy. The judge wrote that the pharmacy chains had dispensed the drugs without effective controls and procedures to prevent the pills from being abused and resold. The retailers are also now required to train personnel on dispensing controlled substances, create a hotline where patients and employees can report inappropriate sales of painkillers, and appoint a controlled substance compliance officer to review prescription validation processes. A heat wave in China has forced several factories to shut down as local governments try to ration power. China is facing its fiercest heat wave in 60 years, with temperatures rising above 40 degrees Celsius. That's 104 degrees Fahrenheit in several cities. The extreme heat has caused a surge in demand for air conditioning in offices and homes, putting pressure on the power grid. A drought has also depleted river water levels, reducing the amount of electricity produced at hydropower plants. China's Sichuan province, which is the country's lithium mining hub, a key component of electric car batteries, ordered all factories to shut down for 6 days to ease a power shortage in the region. Sichuan is also a key manufacturing location for the semiconductor and solar panel industries. The power rationing will affect factories belonging to some of the world's biggest electronics companies, including Apple and Intel. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
This segment of Taking Stock is brought to you by Bulwark Insurance Agency. Insurance made easy. Welcome back to Taking Stock. And first, let me apologize in advance because it seems that this week I'm having some connectivity issues. Last week it was the guest because they had some issues with the provider, and even our viewers, you had some issues this week. I don't know what's going on. I don't think it's my connection. I think it's actually my computer that's just acting all buggy, so I might need to be getting that new laptop from SMS after all, because some stuff just going on here that I can't explain at this moment. But hopefully we're able to get through the show with no major issues. So let me shout out our early viewers. Who is watching us and where are you watching us from? If I can even bring up these comments, because everything is just running extra slow on my time. Natoya says, a Jamaican in BIM. So you're there in Barbados, Natoya. Big up yourself. Giovanna says, up and ready, reporting from Portmore. Let's get this money. Big up yourself, Jovan. Navarro is there in Mapen, Clarendon, ready and waiting. And Natalie says she is ready to learn something new. So big up yourself, Natalie. Big up everybody who is joining us from all around the country and all around the world. So you might have heard some rumors, because I sure did. And then I saw this article in the newspaper that seemed to be confirming, possibly, I can't say confirming, but seemed to be adding fuel to the fire about these rumors about pharmaceutical distribution company RA Williams Distributors. So I hadn't heard a name. I heard about some drug company possibly coming to market. I don't know if this is the company, but we're gonna ask some questions today. RA Williams is reporting 1 billion Jamaican dollars in revenue for the period, I'm assuming it's the year, ended April 30, 2022. And according to that article that was recently published in one of the major papers, I don't remember which one, it could potentially be eyeing an IPO. So let's hear from CEO of RA Williams Distributors, Audley Reid. Hi, Audley. Welcome to Taking Stock.
Hi, Kalila. Good evening. Good evening to your viewers. How are you?
And thank you for joining us at short notice. I know my team reached out just today, and you said yes. So thank you so much.
Yes, happy to be here to take the situation and clarify whatever you need clarifying.
Okay, good. Well, let's start. First, I just want to learn about the company. So tell us a bit about RA Williams Distributors. When was it founded?
Well, RA Williams is a family-owned pharmaceutical distributorship. It started its operations officially in March of 2012. The business was registered in 2009 by our mother, Evelyn Williams, who is a registered pharmacist who was practicing as a retail pharmacy business in Chapelton, Clarendon at the time. So that's when we started, March 2012 officially.
Started in Clarendon. So what exactly do you do?
Well, we distribute mainly pharmaceutical products, prescription drugs, with one or two over-the-counter products in the mix. We supply them to hospitals, pharmacies, and some medical offices across the island.
And you've been doing this, you said the company was registered in 2009 and you started in 2010. So about 12 years now, you've been
2012.
around.
We started in 2012, so it's 10
2012, so 10 years, 10 years. And you're operational, have you expanded beyond Clarendon now?
Yeah, we are actually currently located in Spanish Town. So the Clarendon story was that our mother operated a retail pharmacy, just a regular community pharmacy that you would go and fill prescriptions. What she saw at the time was that, notwithstanding the fact that she stocked mainly generic products and the most affordable of generics that she could find at the time, the community still could not afford those pharmaceutical products. So we had a discussion, myself and I, because I saw the opportunity and I said to her, this might be a good avenue to enter into the distributive space because she had the space at the time. Business didn't quite get off the ground that we would have liked in Clarendon. All the operation there was closed and we reopened officially in Spanish Town. So the business is located in Spanish Town, St. Catherine, and that's where we're operating from.
And where do you distribute to? So do you still have that retail pharmacy or is it mostly just distribution to other locations now?
No, the retail pharmacy was closed in 2010 and it is solely the distributorship, RA Williams, that is currently operating. We reach island-wide. We cover approximately 500 pharmacies, not sure how many doctors' offices. And basically, our drugs are also in all major hospitals across the island, both private as well as public.
Ah, interesting. So what has that been like the past 10 years? And did COVID make any difference? Because now this big health emergency global hits in the pharmaceutical business. What was that like?
Well, the growth has been something to witness, Kalilia. It has truly been a tremendous journey. There's lots of stories to tell, lots of tears we would have shed over the years, but the growth has truly been phenomenal. Um, we would have started back in 2012 with approximately about 12 million in revenue for the first year, and we would have grown to our 10th year where we did $1 billion approximately. So that's the level of growth over the 10-year period. Since then, yes, we would have had several challenges. The COVID-19 pandemic would have been one of them. It presented a lot of challenges in terms of logistics and inventory management, with the disruptions in global supply chain. But I believe we responded to that well, and we weathered those storms, and we emerged as one of the growing and still companies that were able to remain profitable, notwithstanding COVID. It's important to note, I like to talk about it, that as a small company, we did supply the NHF, which is the government arm responsible for purchasing pharmaceuticals for supplying to the public. We supply them with some of the critical drugs needed to treat COVID-19 in the form of our antibiotic or azithromycin through the brand name Zimax. We also supply them with the injection dexamethasone, which was critical for airway inflammation treatment throughout the pandemic, and we still continue to do so. So that's one of the areas where we are proud of, that we were able to be one of the partners to the National Health Fund in supplying critical pharmaceuticals needed to combat COVID-19.
Right. So, yeah. So, and from 12 million, you said, to $1 billion in 10 years. What was the key, would you say, to growing your business to that level?
The key would have been our pharmaceutical knowledge, being trained pharmacists. We knew and had great insight into what the market gaps were, what areas to fill that would give us a foothold. Because it's not easy if you don't have that pharmaceutical knowledge to enter into such a technical space that is highly competitive and where you have to face pharmaceutical giants that are highly capitalized. So that was one, the knowledge based on our background and training. When we started with very little capital, and we realized that we were getting some traction and the business was growing beyond what we could manage. One of the key decisions that was taken was to bring on private equity investors through Danny Williams, who was appointed our chairman in 2015, and his son-in-law, another well-known businessman, and I like to call him business growth and incubator specialist, John Bailey. Their advice, guidance, and mentorship has been critical in terms of ensuring our growth. They've really stuck with us. We've been able to weather several storms over the years through their guidance and mentorship. So I think that has been those two, our knowledge as pharmacists and their guidance, has been the key ingredients that has resulted in our success.
So our Darlene Williams being of Sagicor fame, of course.
Yes.
How did that come about?
Well, I first met Danny Williams in 2000.
Any relation, by the way?
No, no relation.
Just happened to be Williams and Williams.
Williams and Williams. So, we're now family. Met him in 2005 in my last year at Jamaica College. He was just coming on as board chair at the time. And he invited a group of us up to his office in Irish Town. And, we had a chat. He asked us what our insights were in terms of the school and where we think, or what areas we think the school needed to be, improved on. I gave my tidbit. I'm always talking and giving my lending my voice and making my opinions heard. And I think he liked the honesty and the forthrightness. And we've kept in touch ever since. He guided us whilst we were operating the retail pharmacy and provided some mentorship there. So he has been instrumental in our growth as entrepreneurs since then until now.
So he is an equity investor in the business. How much does he have? What percentage?
He owns 25% of the business through his private company, Ravers Limited, and his son-in-law, John Bailey, through Journey Investments, owns another 25%. My family owns 50% of the business.
Okay. So we noticed that you have become more prominent in the press as of late, and we saw some news about some new board members being appointed. Tell me the reasons for those appointments and what they were or are.
Well, yes, I'm happy to talk about them. We've added Dr. Tanoya Toyloy Burrows. That was a key appointment, in my opinion, because we wanted to add more females to the board. That's one. And she came with the pharmaceutical experience as a qualified holder of a doctor of pharmacy degree from the University of Florida. She's also having key experience in terms of entrepreneurship, having started her own retail pharmacy, Livewell Pharmacy in Portmore, and they also have another branch out there in Montego Bay, and has seen successful growth of that business as well. So she will give us insights from the retail sector, who are our target clients. We've also added Mr. Richard Donner, who is well known as an auditor, to help us to strengthen our corporate governance and the accounting and financial management of the business. We've also added Mr. Douglas Lindo, who is a well-known businessman as well, to help us again guide and strengthen the financial management and the corporate governance of the business. You see, when you're moving from 12 million to $1 billion and you're eyeing continued growth at the rate that you've been growing over 10 years, which is over 50% year on year in some instances, and you want to continue that level of acceleration, it's key to bring in the necessary expertise to strengthen your corporate governance and strengthen your management of the company with the vision that we have, which is to grow and become the powerhouse of pharmaceutical distributorship in Jamaica and in the region as well. So that's why we've added these people.
Absolutely. Turning into a $1 billion company is no small feat. And 10 years is a pretty decent amount of time for that to happen. So strengthening the corporate governance, absolutely important to take it to the next level. 10 billion, 100 billion, a billion US is what you're looking at, huh?
Precisely, Kalila. So our prominence in the press over the past 2 years or so was a strategic move by the company. We saw that we were growing rapidly, and we thought we needed to build our corporate image and our corporate profile. So we set out on a plan led by our marketing manager, Kimberly Johnson Dockery, and she would have deliberately crafted plans, and we would have executed them fairly successfully to increase our profile and our presence across social media and mainstream media so that we could get the general public become aware of us as a corporate entity as we continue to build the business.
So let's talk about your numbers, because you've mentioned the revenue being the $1 billion for the past financial year. How much of that was profit?
Our profit is somewhere about 10%. So we're looking at close to, well, certainly over 90 million or just about 90 million in net profits. So that's what we're looking at. Generally, our numbers have held steady over the years. We tend to hold our gross profit at about 45% and net profit at anywhere between 10, 12, sometimes as high as 15% if we're efficient.
Nice, nice. So a lot of people in the chat are already asking the IPO question. So let me try to take one of their questions first. And probably because of how I teased the interview, right? But that's also because I've been hearing about some pharmaceutical company that's looking towards an IPO. I hadn't heard a name. Then I saw this article in the paper, put two and two together and said, I wonder if it indeed is this company that's coming public soon. So let me just ask you straight out, are you planning to do an IPO anytime soon?
The truth is, Kalila, our business, as I said, is growing rapidly. And what we are currently doing and what we have always done is to always keep a close eye on the finances of the business, because the key to growth and growth at a high level and pace in the pharmaceutical industry is capital. A pharmaceutical business is capital intensive. It requires an enormous amount of money to continue to fuel growth and to fuel it at the pace at which we've been growing. So what we're doing is just to continue to monitor our finances, look at where it is that we may need continued investment. So nothing is off the cards. I mean, we will determine in due course if we will need to raise a bond, consider private equity investment, or if we need to go to market. I believe our board has the wisdom and the expertise, and we will be guided properly, and a decision will be made one way or another sometime in the future.
So you do need to raise funds soon, but you haven't decided how much money you need.
We're not exactly sure. That is a part of what we're still looking into. If you're following our social media, you see where we just brought on a new financial controller in the person of Mrs. Suzette Bayrou. She has over 15 years experience in the pharma industry, and she's helping us to strengthen the financial management of the business. We are looking at our growth rate and our growth pace, and we are trying to determine, do we need additional capital right now, or will we need it later on? And if we will, how much? So those are things we're still crunching. What I can say is that the COVID-19 pandemic showed us that we needed to ensure that we had access to capital. Thankfully, we were able to find it throughout the pandemic, because the impact that it had on the business, and I'm sure this is not unique to us, it's unique to most distributorships, and especially if you're in the pharma industry. The response to ensuring that you continue to grow and continue to remain profitable despite the global supply chain disruptions was to hold larger amounts of inventory. We did something like our regular holdings was somewhere around 4 to 5 months of inventory on a regular basis, and we more than doubled that in some instances. So we increased it to 8 months, in some instances over a year's worth of inventory, just to ensure that we were able to have continuous supplies to the market and meet the needs of the population.
So on that note, you have had an issue in terms of space because, like you mentioned, you have inventory, you need to store inventory, you need space. So I understand that you found some type of solution to the space issue.
The space issue have been I would say a long-standing thing. Thankfully, where we are, the our partners who lease the space to us have been very accommodating because our business have been growing so rapidly. Sometimes, as I said, doubling revenue year on year. And now we basically occupy half of an entire plaza. And the business is showing no sign of slowing down in terms of its growth, which we're happy for. So we have had to be proactive. And yes, we think we found a solution. Right now, we're occupying roughly around 8,500 square foot of space. We've been able to negotiate a new purpose-built facility that will be built specifically to house us later on this year. We hope to take occupancy of that building, which will give us over 20,000 square foot in terms of office and storage space, which we think will continue to assist us in our continued growth and business development.
20,000 square feet. So you're more than going to double
Yeah.
your current operation, your current space. And that's going to lead to an increase in expenses too, but also more space means
It's
more
gonna lead to an increase in expense, but it is a necessary decision, as I said, because of
right.
the growth of the business. We did $1 billion last year. We're looking to grow the business in excess of 30% this year. So we are hoping to do over 1.3 billion at the close of April 30 next year. The business continues to be attractive to new principals. So we're always having new principals knocking at the doors, inquiring about our services and scoping us out as a new distributor. So at any point in time, we can add more principals and increase our business. So we have to be prepared for that. So we are being proactive because we are making the business attractive. We're working very hard to continue to perform in terms of our revenue turnover and to continue to be profitable. So it makes sense to be proactive and ensure that you have adequate space that can accommodate the level of growth that you're pulling out.
All right, let me take a few questions from the viewers. First one comes from Roswell Campbell, and Roswell says, Indies, that's Indies Pharma as a drug distribution and pharmacy company, will give you or is giving you some competition with other players in the market. You will have to come up with a more strategic plan. What's your response to that?
Well, I'm not so certain what strategic plan specifically the viewer is referring to, but what I can attempt to do is to clarify the difference in business model between our company and our competitor Indies. Um, Indies Pharma is a pharmaceutical distributor. They are listed on the stock exchange, so their revenue and profit results are accessible. But they focus largely on a single pharmaceutical line that they own and that they market. Our model is kind of different because we believe that model is it exposes you to issues like a pandemic, where if you have supply chain issues and something goes out of stock, it hits your revenue hard and fast. We, on the other hand, get different supplies from various suppliers. Some of them do their own marketing, some we assist with their marketing. And so, in some instances, if, for example, like we're having now, if an item goes out of stock on one of the particular lines, you can always rely on the other products on the other lines to maintain revenue. So that's the difference in the business model. Indies focuses on one single line and get their products from single source. We get our products from varied sources, and so if any eventuality happens where one of the lines, anything should happen to either one of them, we can always rely on the revenue from the others. And we're continuing on that path and on that focus. We want to make our business more attractive to other principals. That's why we're moving into a bigger space to let principals know that, hey, RA Williams is here. We can offer good service. We offer excellent reach and distributive capabilities. We access over 500 pharmacies right across the island. Hospitals, every single hospital purchases and have access to our drugs, so that's where we are in the market. So we are different from indies, and we are aware that they bring strong competition, but they are not the only ones. I mean, there are much bigger players than indies, but we're not focused so much on the competition. We're focused on strengthening our business, improving our service delivery, and building a business that is sound financially and has a strong revenue base and continues to turn out profit year after year.
Right. So my viewers would be familiar with Indies because Indies is actually listed, but another major competitor would be CariMed, and that's probably the biggest. I don't know. I don't know the market, but I would think that CariMed.
That is the biggest pharmaceutical drug.
Before you respond, I wanted to take the comment. Where did the comment go about CariMed? Okay, here it is from Ryan Wallace. Ryan says, that sounds good that you're growing storage space of products. Soon I see you set up shop like CariMed in the economic zone at Innswood.
Right. So yes, CariMed would have embarked on a project, but to I guess be proactive like us. So it shows great minds think alike, right? You have to be proactive in this current climate. Storage space and storage facility, especially when you're dealing with pharmaceutical products, is highly critical. It has to be purpose built, because it has to be specific to the requirements of pharmaceuticals, which have varied and specific temperature requirements and storage needs. They have to be compartmentalized and separated from each other, with ethicals separated from non-ethical products, dermatological products or external products separated from internal or oral medication, those kinds of things. So it's a very technical requirement for pharmaceutical storage. And our competitors have been proactive in terms of ensuring that they are beefing up and improving their storage space and distributive capabilities. And obviously we've done likewise with this new facility. We're very excited about it. It will be one of a kind in a multifaceted complex, which will have various other commercial interests and operations in the likes of Sagicor Bank, and I think Island Grill is going to be there as well. But there is also a residential space that will be in the complex. So we will be in the mix, and we're very, very excited about our new facility. It will have the latest technology in terms of it's almost 100% solar. So we'll realize some savings there on our utilities. Nice. And it will be a great facility.
Well, keep us up to date, Audley. We definitely want to hear what your plans are and what you do decide when it comes time to raise that capital that you need to expand. All the best.
Certainly, Kalila. Thank you for having me, and all the best. You'll hear from us again, hopefully soon.
Absolutely. Thank you so much.
Sure.
All right. So it's time for our poll question, but based on all the comments in the chat, I feel like we're asking the wrong question tonight. So we're going to have to set up another poll. But our question for this evening is, what is your reaction to the Bank of Jamaica raising interest rates to 6%, the overnight policy rate? A, the constant hike in interest rates is unreasonable. B, it doesn't matter because inflation is already making things hard on people. C, how does this really affect us? D, or just leave a comment so you can take that poll on Twitter and on YouTube. Although I feel like I should have asked, what's your reaction to the one-on-one basis of allotment? No, I shouldn't have asked that, because based on the comments, I already know or the vex or are not happy with the basis of allotment. We're going to talk about it up next in the Analysts, but first, here is your market recap.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy. Time now for your market recap. The JC Combined Index lost almost 5,000 points or 1% last week. 123 stocks traded across the main and junior markets for the week ending Friday, August 19, 2022. 42 advanced, 71 declined, and 10 stayed the same. 739 million shares changed hands on the Jamaican dollar market, valued at $4.3 billion. Pulse Investments was the most traded stock, taking up 47% of market volume. People bought and sold 351 million shares in the company. The stock lost 7 cents to open this week at $3.58. Sagicor Real Estate X Fund traded at the second highest volume, with people buying and selling over 280 million shares in the company. The stock opened this week at $8.35. And dollar rounded out the most traded, taking up nearly 2% of market volume. 13 million shares traded. The stock's price lost 10 cents to open this week at $3.15. Now let's see who had the biggest gains for the week. Margaritaville Turks was last week's biggest gainer, up 33% to open this new week at $29.40. Everything Fresh was last week's second biggest gainer, up almost 27% to open this week at $1.60. And rounding out our biggest gains, Trans-Jamaican Highway 8% is up 22% to open Monday at $1.97. On the losing side now, Margaritaville Turks USD was last week's biggest loser, down almost 30% to open Monday at 11 cents US. Siboney was the second biggest loser, falling 25% to close last week at 45 cents. And First Rock Real Estate Investments USD was down 21% to close last week at 4 cents US. Over on the Trinidad and Tobago Stock Exchange, the composite index advanced by 4 points last week. JMMB Group was the most traded stock. It opened this week at $2.30 TT. Clico Investment Fund was the market's biggest gainer, up 8% to open this week at $30.95 TT. And on the losing side, RA Williams fell 6% to open the week at $2.01 TT. In the US, the Dow Jones was mostly flat last week, while the S&P 500 lost almost 1% and the Nasdaq lost 2%. Over at the pumps, motorists saw another jump in gas prices as 87 rose $1.30 and 90 rose 25 cents. Meanwhile, diesel prices jumped by $4.50. In foreign exchange, it took an average $151.78 Jamaican to purchase $1 last Friday. That's 68 cents less than a week before. And on the crypto markets, Bitcoin continued its volatile streak on Monday, falling 9% in 5 days compared to a slight 1% gain last week. The cryptocurrency was trading at $21,193 on Monday. It was the same for Ethereum, which fell 15% in the past 5 days compared to the 3% gained last week. The cryptocurrency was trading at $1,555 on Monday. This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers.
Oh, let's take some of these comments. A lot of them were coming in, and I wanted to start with Elaine. Elaine said, all I heard was that he does not want our money. Sigh, no IPO here. So which part you hear that, Elaine? That's not what he said at all. He said that they may be considering raising some capital, but they haven't decided how, if it's going to be a bond, if it's going to be an IPO. They haven't decided exactly how they're going to do it. He didn't say that he doesn't want your money. So just watch this space. Make sure you're on the newsletter so that when anything drops, you are in the know. Now, of course, the hot topic in the comments this evening is that one-on-one basis of allotment. So let me read some of those comments. Ryan says, tired of juniors, meaning junior market IPOs. I'm going to stick with Charlie Munger's advice to quit investing in the small IPOs or cheap stocks and go for the sustainable, high revenue, dividend paying stocks. Elaine says, one-on-one IPO, $7,000 on one-on-one IPO. That's if, I guess you watched my Instagram video, my TikTok, where I broke it down that if you put in $100,000 in the one-on-one IPO for the general pool, you would have ended up with an allotment of about $7,000. So Elaine said, $7,000 on one-on-one IPO. I'm not buying any more little bit of IPO. Vlog says, junior market IPO, little bit of money not working out. Strong Link says, yes, Ryan, getting a little uncomfortable with the frequency of IPOs myself. Investors need to study the prospectuses carefully or some will get burnt. Zakar says, one-on-one broke my heart. And then Elaine again says, all I heard, this was the one I already read. And then Philip, on the other hand, says, the basis of allotment is great and expected. And I have a feeling I know why Philip would make this statement, because, it means that there is scarcity, supply and demand. But let's get our analyst take on this. And this evening we have with us Greg Lindo, and Greg is, let me find his title, Assistant General Manager of Trading and Treasury there at JMB. And we also have Keisha Bailey, who is CEO and founder of Profit Growth Starter. Welcome, Greg. Welcome, Keisha.
Hi.
Thank you for having me.
So I know you guys have your prepared topics that we will talk about, but the hot topic this evening, everybody in the comments is all up on this one-on-one basis of allotment. So I want to hear you guys' thoughts on it, starting with Greg. What's your reaction to the basis of allotment? The first 5,000 shares plus
It's supply and demand, Kalila. It's 8 times oversubscribed. So you could look at allotting it in various methodologies. If it's a hot IPO and you get enough applications, you're not gonna escape the low allotment. But it really points to the fact that the retail market is definitely strong and looking to deploy capital into offers. So it's really, I don't think it's something that the company itself could really do anything about. I mean, it sell off. That's just it. And I hope that persons take note that, I mean, this isn't gonna be the first or the last IPO to come out with a relatively low allotment. We saw relatively low allotments for previous IPOs, and investors need to take this into account when they're applying. You do have persons that apply for IPOs, and in order to increase their chances of a higher allotment, they put in maybe 2-3 times what they may really want. Well, guess what's going to happen? If enough people do that, you're going to skew your allotment lower. So, I understand that, it's unfortunate and persons are disappointed, but that's just the nature of how the market works.
Yeah. Keisha, your thoughts?
It is a good thing because a couple of positives on it is that, there is investor appetite. People are now getting into the markets, which we wanted. Way back in the day, without aging myself, there wasn't this much interest in the stock market. It really was, an exclusive or elite group of persons. Now it's become more accessible. During the process, yes, we are, because of the small allotment, yes, you won't get that big amount, but it also is good training that, the quick flip of money is not sustainable. And so if persons are looking for that, IPO as my strategy to build wealth, that would not be a sustainable one. So it goes to show, I mean, sometimes, it's a tough lesson to learn, but nothing against the companies. They are strong companies coming out to raise capital in a very efficient way. So good on them. If we think about putting on our investor hat, work with a different strategy that's more suitable for long-term wealth creation. It may not be the IPOs for you.
So a couple more comments from the public. Like I said, this is the hot topic tonight. Tiffany says, wrong comment. Tiffany says, have us reading how much hundreds of pages and money around money for waste with time. Blog says one-on-one made it bad is making it bad for other potential IPOs guaranteed. I don't know about that vlog. And then Rizzy has the other perspective saying what people should know is that the general pool is always oversubscribed. I wouldn't say always. Well, on these small offers, that seems to be the trend. If they really want the stock, buy lots at opening or $3 or so. I guess this is his prediction. And sell fast at $5 to $6. Then sit back and watch the drop to 65 cents and then buy it again. So some predictions there coming from Rizzo, if that indeed was to happen. And then Elaine also saying I'm not buying any little IPO again, not wasting my eyesight on reading fine print again. So a lot of people highly disappointed in this. But like you were saying, you have to understand it's supply and demand. If everybody got most of what they asked for, the demand wouldn't be as high because you have lots of supply, and then you're not going to have the rapid price appreciation, which is what most of you are looking for these days from an IPO, right?
But everybody reading the reports, which is good. Education is improving. Good point
Wonderful.
there. So everybody
Yeah.
reading the 100 pages. So over time, we get better. That's the aim.
That's great. Yes, that is a great point. I love that you guys are actually reading the reports and reading the prospectus and getting to understand and not just jumping on the hype. So if you think that this was a good company, it's a good company regardless if you didn't get as much as you wanted to get. And it's still gonna be a good company tomorrow, it's still gonna be a good company next week. And you look at the next financial report and see, what their income and profits are and so on. So I would say don't let this discourage you. It's about the companies. The allotments
Mhm.
just mean that it's going to be a much faster price appreciation, in my estimation, when it actually does list, possibly in a couple of weeks, maybe even as early as next week. All right, so we have couple of things going on the markets right now. And Greg, you have been looking at Sagicor's financial performance for the past 6 months. What are the highlights there?
Well, Khalid, I mean, Sagicor is I think it's the second largest company by market cap on the market. And, financial companies have had, I'd say, a fairly tough quarter given what's been happening globally with interest rates increasing and the impact that's been having on investment portfolios. But we're seeing Sagicor pull out a fairly decent quarter. I mean, profitability is up, which is always a good thing. But, looking behind the numbers, you would have actually realized that the net revenue is actually down. But however, they were able to control their costs. So the fall in expenses was actually greater than the fall in revenue, and they were able to eke out a 25% increase in profits. Notably, it would have been the first quarter as well that they would have had Access Financial Services under their portfolio, because they would have completed that acquisition on the 1st of April. And it appears based on the notification in the results that they paid about $3.5 billion or so for that entity, which appears to be a deal. Granted, there would have been some damage to the access value given some of the events that surrounded it, but certainly it's a very good acquisition for Sagicor, and it complements their businesses. They're heavy into insurance, financial services, and picking up an acquisition such as Alliance should be very complementary. And I expect to see the increase of share of profit from that company continue or increase going forward, because I know they have plans to ramp up that business, and we're already seeing it in terms of how they're marketing and how they're increasing their presence of Alliance or renewing the presence of Alliance, especially with its dealers. So I think it's an encouraging result for Sagicor. They would have gotten a heavy hit on their investment portfolio if you looked on the comprehensive income line, but they were able to make some actuarial adjustments to actually cushion the profitability of the company for the quarter. And notably, because of that actuarial adjustment, the individual insurance line was a top performer for the 6-month period. I think they grew their 6-month profit from individual lines by over 100%, which is notable. But commercial banking is also another strong area for Sagicor. Sagicor Bank has been doing well. They've grown their 6-month profitability by over 22%. Revenues are up by 19%. So it's been doing pretty well, and it shows the value of having a diversified business model, because the investment side has been under pressure, mainly due to some of the issues I highlighted earlier: higher interest rates, fallouts in global markets. So it's good to see that the group is continuing from strength to strength, and the alliance investment would have bode well for them. So I have positive outlook for them moving forward. The stock is not being necessarily loved on the market, even with the acquisition news. It's down about 3.3% year to date. So there is some room if the market decides to pick up, because I mean the market on a whole has been down. So we'll certainly be looking to see what happens going into the year end. So the September to December period will be certainly a time to watch and see what picks up in the market, because we've been kind of in a lull for the summer.
Right. So I missed what you said in the beginning because I was reading some of the comments and seeing the dialogue going on there. Did you say that the alliance results are in these results?
Yeah, they would have completed the alliance financial acquisition on the 1st of April. So for the period April to June, those numbers should be included in their results.
Okay. And can you see what type of impact that would have had on these results?
I wasn't able to break it out. Given that they're restarting that business, I would suspect that it would probably take some time to ramp up. So I would probably give it another quarter or two before I can see the true impact of the business going forward. But we do know that they paid over 3 billion, which I think 2.5 or so was a cash payment, and there's a contingent payment based on the performance of Alliance moving forward. So there's still a lot to see in terms of how it plays out, but it's good to see that they have that business up and running under the Sagicor umbrella.
Right. And like you mentioned, they've been promoting it heavily, making people know Alliance is open, is now under the Sagicor umbrella. I've been hearing the ads running for it. So we're definitely looking out for that impact in subsequent reports. Now, Keisha, we have a question for you from the audience. It's related to what you're going to talk about, because people already expect certain things of you when you come on. Keisha, you have a reputation.
I realized I saw them. I was like, oh.
Oh, you saw it already. So the question comes from Levar. And Levar says, Keisha, what can we expect on the global market with factories in China closing down?
Well, so the impact would be on supply chains, given that China is in the de facto world's largest producer. Shutting down the factories will have that spillover impact to supply chains, but the impact is less than it was earlier on in the year when the lockdowns were more aggressive. They've been eased. They're still in lockdown, but they've been eased somewhat. So the impact on supply chains would be less, but that's where we'd feel it. Supply chains, then ultimately, if it persists, we see it in terms of prices and possibly inflationary impacts.
Okay. And you have been watching, well, you always watch the major US markets. The S&P 500, all right, stocks fell on Friday, and then the S&P 500 snapped back, or has been snapping back. There's been a 4-week-long rally. Why is this? What's going on? All of a sudden, the stock's coming back? What's happening?
So they were rallying up to Friday. Monday, we had a major sell-off in the US stock market. So Monday, we can say the rally has been over because it was the worst day in the US market post June 20 of this year. So big drop in a lot of prices, because what happens, we have investors now coming back off a summer break. The traders are going back to their desk. And so the worries around inflation, is the economy okay? Is the Fed going to keep hiking interest rates? All that's coming back. And so persons are starting to sell stocks again. Because of that, we have the market heading down. One of the major stocks, Apple, largest company in the US, they took a hit. And so with that, the S&P 500 came down a lot. What the worry is about is that over the last 5 trading days, the S&P 500 is down 3%. NASDAQ, which represents the tech stocks, that's down 4%. And then the Dow Jones, the broader market, that's up slightly, 0.13%. The worry here is that Is inflation really under control? Does the US Fed really know what they're doing? And because of that panic, some investors are aggressively selling and pushing the market lower. What we're waiting to see is what's going to happen on Friday when we have the US Fed going to Jackson Hole, which is a place. They're going to Jackson Hole for an economic symposium where Jerome Powell will share his views around the US economy and inflation. He will also be talking about what he expects to happen with interest rates. That's a very critical day because based on what happens, investors will react whether by starting to slowly buy stocks again, re-enter the market, or they may continue dumping stocks and other risk assets. So that's why you would have seen cryptocurrencies falling as well, because everybody's getting rid of these risky assets and going into the safe havens, as they call it. That's what's been happening largely. So we'll wait to see what will happen on Friday and see what that means in terms of the future outlook for the US markets.
All right. Well, we'll be waiting to see along with you, Keisha. Keep us updated. You guys, make sure you follow Keisha. You know, she's at Profit Jumpstarter on Instagram. Give all your handles, Keisha.
Profit Jumpstart on Instagram, Profit Jumpstart on YouTube, Profit Jumpstart on Twitter, and
you have a newsletter
on TikTok.
And you also have a newsletter.
Yes, a newsletter as well, where we share tips and strategies of how to navigate this time. We're all about showing people how to grow.
How do we get on the newsletter? What's the address to subscribe?
ProfitJumpstarter.com/newsletter.
Big up yourself, Keisha. So
big up yourself, Kalila.
No, but all right. So we have tons of comments still. People still not letting go of the one-on-one situation. I want to get both of your perspective on this comment. And I see a couple of people coming with this kind of reasoning. So Chipmunk Financials says, I think they want everyone else to make big money off the general public. At least 50% of the allotment should be for the public. The stock exchange needs to step in. And then Brian had a similar sentiment, says JST needs to implement a minimum take-up for the general public with IPOs. There needs to be balance and fair game for everyone. I want both of your perspectives on that. Greg, do you think that there should be a minimum subscription pool for the general public?
In my mind, even if there is, the allotment is a function of the demand. So if it's 120 million that you're looking to raise, and it's 10, and 4 out of the 5 billion that goes into application goes into it, I'm still not sure how you're gonna escape a small allotment. I mean, do you want to limit things? I mean, I know the FSC has been engaged in dialogue with the market around not having things like broker reserve pools and limiting the reserve pools. So hopefully that could be something that they may look at, or they may say, listen, okay, the minimum to list a company, you have to offer 20%. They may want to change that. But it's very difficult to say. I mean, as long as there is strong demand, I'm not sure how much better you're gonna get it, right? And guess what? If you increase the amount that the company has, then suppose it just attracts more applications. There are so many what ifs. You know, it's very difficult to say. So for me, if you like the company, you read the prospectus, then I mean a small allotment is just the first step, right? If you really like the company, then look at it on the secondary market once it lists.
And what do you think?
It's the same thing that happens in overseas market, right?
That's just how it works, Greg. Just as Greg said. So back in the day, as an institutional manager, you would have applied for the IPO. Your allocation would be small as well. So it's not just us, the regular people on the streets. It's also the institutional clients. They also have a small allotment. If you see the company as a solid company for long-term investment, then post-IPO, you buy more. The thing is, that's just how it would work, because played through, if everyone got a big allotment, then what would happen? Post IPO, there wouldn't be that much trading volume because everyone would have a large enough amount. So when those who are looking for that quick flip and they want to sell, who would they be selling to? Because the market needs to bring buyers and sellers together. If there are no sellers, what would happen? we have now the reverse problem of people saying, oh, I've bought into these IPOs and there's no liquidity because no one wants to sell. So
in my experience, Kalila, you have other markets in the world where the allotments are very subjective as well. You have other markets where they choose and refuse who gets what, or they just have a straight up lottery. So if it's either you get or you don't get, so you may not even get anything in an IPO. So there are many different ways you can look at it. I think the current way is balanced to an extent, but if there's just overwhelming demand, there's just overwhelming demand, and that's just how I see it.
So I like this point coming from a couple of our viewers. So Akeem is looking at it a little bit differently, and Akeem says, finally, some good news, aka opportunity for teachers. And then we had another similar comment coming from Daniel. Daniel saying, where were you guys when Spurtree's IPO general pool was oversubscribed, with the employees pool greatly undersubscribed, blowing things out of proportions? IPOs are great, but it's not a quick buck machine. And which is something that I pointed out as well, because in previous IPOs, we have seen where there have been reserve pools for employees, for example, and they were not taken up. And one thing that I'm happy about is that in this IPO for one-on-one, the reserve pool for teachers was fully taken up, oversubscribed. The reserve pool for employees was fully taken up, oversubscribed. And I'm proud of them for taking full advantage, because we've seen in the past where that didn't happen and they lost the advantage that they had.
Yeah. It's a good move because there's general greater investor interest, which is what we want. When we think of larger markets, there are thousands of listed companies. We are getting there. We're stepping in the right direction. There will need to be many, many more IPOs coming to market for us to have a more buoyant stock market with more depth. So I'm very excited that this is happening, because this is what's needed also for economic development as well. So look past the short term. Okay, I didn't get to Forex my money this time, but there are other opportunities, because with more listed companies, we have more breadth. We have more opportunities to build long-term wealth. So if we think long-term, long game versus short-term, quick money, we are actually creating a better market with more IPOs coming.
Well, Omari has an idea. Omari says, the next brokerage to list an IPO, I'm applying for a job so I can get a good allotment.
If there's a broker pool,
employee reserve pool, Omari.
Greg
I think by the time it's announced, though, you would have had to already be an employee of the company. So you kind of need to just maybe apply for at RA Williams, if that one is coming to market soon. But yeah, employee reserve pool, if you can get in on it, if you qualify for any reserve pool at all. So for example, if RA Williams was to do a listing, you might see a reserve pool for maybe doctors and nurses. If I recall, Indies did that when they did their listing. They had a reserve pool for doctors and nurses. There might have been another one, I can't remember, but just think about these potential listings and where you may fit in depending on the industry that you work. And if you qualify, take advantage. I think that's one of the big lessons here. But thank you so much for joining us, Greg and Keisha.
Thank you.
Thank you. Right. Take care.
We'll take a very quick break. When we come back, I'll take your final comments.
This segment, The Analysts, was brought to you by Jamaica Money Market Brokers.
Hey, moneymakers, you're not an official part of the family until you have your merch. Visit KalilaReynolds.com/store to order your t-shirt and your mask today. Let's get this money. Let's get this money. All right, let's take some more of your comments here. And man, the comments are rolling in tonight. This is the hot topic, starting with Daniel Taylor, who says, Punta Cana, anyone? And that has to do with the news of the Dominican Republic launching a low-budget airline, and they'll be launching flights between Jamaica and the Dominican Republic in October. So Punta Cana, a holiday destination, perhaps, go for a quick trip, weekend vacation in Punta Cana. Then Elaine, this is another hot topic nationwide this week. That story about the brain drain, Jamaica having the second highest brain drain in the world. And there was a discussion over the past few days specifically about teachers leaving the island. Well, Elaine says, I contributed to the brain drain and I am happy with my decision. I would do it again if I could. Well, hold firm, Elaine. Big ups to you, I guess. Do what you got to do. I mean, that is the basis of capitalism, right? Self-interest. You do what is in your personal best interest. All right. Philip says the stock will be available for purchase on the market, referring to one-on-one. The prospectus is not just for the IPO. I still look at prospect for some years to come. So for those of you who are disappointed that you didn't get what you wanted, well, you can purchase on the open market when it begins trading. And it's going to be tough out there. It's going to be some rough waters. Football fans exclusive says one day they will take us for granted so much. And then boom, IPOs start getting undersubscribed. Let's see if that prediction comes through, football fans. And then Learn, Grow, Invest says IPO is not your only chance to own good companies. Great point, Learn, Grow, Invest. You will have buying opportunities once listed. That's right. You don't always have to just jump on the next IPO trend, whatever is coming as an IPO. You can buy on the open market. You can buy existing companies. IPOs are not the only game in town. You guys need to just always remember that. And let me see. We have a few more comments here, but computer going a little bit slow again. So I'm going to leave it right there for this evening. Thank you so much for joining us. If you haven't done so just yet, make sure that you hit that like button, leave us a like, and you can share this video with a friend on WhatsApp, on Facebook, on whatever platform that you use, Telegram, and let people know that they can be a part of the discussion too. It was my pleasure joining you this evening. Follow me all over social media at Kalila Ray and on Instagram at KRM_business news. These are the only two official pages. There is no backup page, no official Kalila Ray, nothing like that. Those are fake pages. If you see them, please report them. But I am on all platforms, all social media platforms at Kalila Ray. And that is my only official account. Make sure that you're subscribed to the newsletter as well. Go to KalilaReynolds.com/newsletter to get IPO alerts, investment alerts, breaking money news directly to your inbox twice a week. Those newsletters come out Wednesday and Sunday. Well, until then, I'm Kalila Reynolds. Let's get this money.
Let's get this money.